Hey, Steve Saretsky here. As always, this is a Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, I'll ask you to hit thumbs up and subscribe. Questions, comments, put those below. I want to do a nice juicy video here before I take off for the long weekend. Obviously, I think it's one of the most interesting and fascinating macro environments that's really unfolding in front of our very eyes. US Fed cut 25 basis points earlier this week, sort of as expected, actually not really doing enough as the US dollar continued to rip higher. And of course, a stronger dollar just really weakens the overall global economy that is really short on US dollars. So that's something to watch. Interesting to see as the sort of the global markets, global economies continue to slow down and decelerate. I do not believe that this is quote unquote an insurance cut. If you're watching Real Vision's Recession Week, where they interviewed for 2 weeks straight the smartest macro minds on the planet, that clearly this is a slowdown, and I think there's another rate cut here coming in September. So obviously trying to put this all together, how does this impact the Canadian housing market, Vancouver real estate market, etc. Well, I think that we are clearly in a global cyclical slowdown. The Fed's trying to fight it. The ECB is talking about a rate cut coming up here in the fall, trying to bring rates down to negative 40 basis points. I mean, this is, again, all these global central banks are reaching that zero lower bound, where basically cutting interest rates from these levels is not stimulative, as we've seen not just in Japan, but now also in Europe. And it looks to me like the US is certainly going down that path. So where does that bring you to Canada? The May data, surprisingly and almost funny enough, is continues to be strong, or relatively strong in comparison to all these other countries. But all that strength was in manufacturing, where all the manufacturing globally is slowing down, and was in real estate and construction. So those are your two pillars supporting the Canadian housing market, the Canadian economy. So obviously bears in mind to be questioning how sustainable that is, but certainly from a real estate and construction standpoint, this is where we'll focus the rest of this video here moving forward. We currently today have a record number of units under construction per 1,000 adults. So you'll see here a great chart recently updated from the RBC economics team, is there is a record amount of apartments under construction across Canada. So not just in Vancouver and Toronto, but this is happening across the nation. So this is still propelling GDP because you still have all these units under construction, people in the trades sector still actively employed, and housing starts remaining relatively buoyant. But with that being said, is what we're seeing here, at least in Vancouver, is a slowdown, a significant slowdown. I was speaking with one of the reps for one of the pre-sale marketing firms, or sorry, pre-sale analytical firms, telling me that they were projecting supposed to be about 8,000 units released as for pre-sales in Greater Vancouver year to date, as of from January to the end of June. Of the 8,000, only 5,000 units actually got launched. So developers, what they're doing is they're basically scaling back, pulling back, and saying these projects are no longer feasible based on market conditions. So once this pipeline of a record in Vancouver, 44,000 units, just topped an all-time record high in June of units under construction. Once those units start to complete, the pipeline for all these constructions and tradespeople begins to thin significantly, and I think that is when it starts to weigh on the market and on the economy. So perhaps certainly a lag effect there. But interestingly enough, if that wasn't enough to sort of put a wrench in it, you have Vancouver home sales actually rebounding for the month of July. As I've mentioned in my previous reports the last couple months, if you read the Saretsky report, which is free, I'll have the August one out in the next couple days, I had mentioned that sales were most likely, almost certainly, have bottomed and would begin rising from here. If you look at July 2018, it was the slowest July in 18 years. So from a comp, if you're comparing that comp on a year-over-year basis, that's very hard to top. You're basically telling me that sales have to be slower than an 18-year low, when of course the population is much higher than it was 18 years ago. So almost impossible to do. So what you'll see this year in the media headlines, which will be interesting to see how the public perceives it, is July sales should jump about 22-23% year over year for the month of July. At the time of this recording, that's what my data is showing me. So clearly that's positive. It was actually the second busiest month this year for real estate in Greater Vancouver, other than May, and July is supposed to be a seasonally slower time of the year. So definitely a bounce in home sales, but of course way too early to be calling any sort of trend here, but certainly something to watch moving forward. But again, I'd like to contextualize this, that the July sales were still below the 10-year average. Inventory, although actually decreased. So some I would actually say, if you're looking for some sort of hope for the Vancouver housing market to rebound, or potentially, hey, maybe we've bottomed, this was certainly good data supporting that narrative or hope. But I always like to contextualize. If we look year to date, January now through the end of July, we still have the fewest home sales for those 7 cumulative months since the year 2000. So clearly it's still an extremely weak housing market. But this has been a bounce. We'll have to continue to wait and see how this plays out in August, September, etc. before you start calling things. But honestly, this video, this channel has never been about making predictions. It's simply about informing people about the real estate market, about my thoughts and convictions, and allowing individuals to make those decisions that suit their needs. I don't think you can provide blanket advice. I think that at the end of the day, it's a data-focused channel, and as I've mentioned, clearly a bounce in July. But I think that, in my opinion, what is potentially a likely scenario is for volumes to move sideways and prices to actually move sideways. So it's interesting to note, we're still waiting for the official MLS benchmark, but if you look at average price per square foot, etc., prices still moved lower. So you had higher volumes and lower prices. This is very reminiscent of what happened not only in the US, but in parts of Europe during their housing bust a number of years ago. Is if you look at the US, home sales actually bottomed in 2009, yet prices continued falling up until 2012 when they officially bottomed. So what happens is sales, the very lack of sales ultimately creates the illiquidity and the buildup in the inventory, and creates the conditions for people to offer lowball offers. And I think what we're seeing in Greater Vancouver is certainly sellers becoming more realistic about what their home will actually sell for, and so that's why we're starting to see the volume. I think that buyers are also being enticed back in through 15-20% price drops, as well as 80-90% basis point drop in mortgage rates. So that's helped spur some of the activity. But I think what's possible is that you continue to sort of move sideways here for the next 2, 3, 4 months potentially. I think it, again, is ultimately going to depend on outside factors, which is the economy, and I think particularly the not only the global economy, which was we're watching what the Fed is doing, but the Canadian economy as well. And in my opinion, I am still subscribed to the notion that this is a real estate driven economy, and as real estate goes, so too will the economy. And I think that it's important to watch what's happening in the construction space and in really the credit space. Credit is what drives real estate demand, and credit is what drives prices higher. The more banks lend, generally speaking, the more demand for housing there is, the higher the prices, which then creates a self-fulfilling feedback loop. And if you look at household credit and mortgage credit, still growing at the slowest pace. Household credit in Canada in the month of June still growing at the slowest pace since 1983. And so I think that at some point that is going to be, well, it already is, a headwind for housing. But nationally, again, we look at different factors, bullish arguments, bearish arguments. You have record net migration into Canada. Obviously, we're just pumping immigrants here. Some people call it population QE, as you'll see in this chart from RBC. But despite that, this sort of reminiscence of the late 1980s, you also have a record number of apartments per 1,000 people. So despite the population growth, you still have record number of homes being built adjusted for the population. Again, another chart that was released by the RBC team. I'll actually include a link below to that report where you can check out the chart. But clearly there's a massive construction boom, and that's obviously what's propelled a lot of the Canadian GDP growth. So I continue to be focused in this macro environment and how that might impact housing, really just watching all sort of different indicators. But again, not only fascinating from a housing perspective, I think that's kind of one aspect of it, but just to see, like, oh, this guy's bearish real estate or whatever. No, it's just, you just provide the data and then you can interpret it as you see fit. I think that it's not so much maybe bearish real estate, it's understanding that I think this is we're going through a global economic slowdown, and I think that Canada, given the high levels of indebtedness, which people have really been flagging for the last 10-15 years, which has obviously gotten tiresome, I think that has put them in a very vulnerable situation. And so that's kind of where I'm watching, just to see the Fed cut. I think they're cutting again in September, and I think that this is clearly the beginning of a cyclical slowdown, which would be interesting to see if the central banks, the almighty central banks, can fight it, given that there's very little room to actually cut rates. And I think that they're going to have to revert to quantitative easing. The Fed also announced that they'll be shutting off quantitative tightening, so they'll no longer be reducing the balance sheet, but merely expanding it. So again, how stimulative will that be? We've seen that for the last 20 years it has not worked in Japan, but alas, we shall see. I think that these movements are significant not only for real estate, for other markets. My personal portfolio outside of real estate doing extremely well in this environment. As you've probably noticed in these videos, I've been mentioning that there would be a rate cut this year, without a doubt, and I've actually admittedly been wrong on the BOC. I thought the Bank of Canada would have been cutting rates by now. I said by the fall they would, and it looks to me, I think if the Bank of Canada moves, it probably won't be until 2020, most likely. I think that we'll probably get another cut from the Fed, and the BOC will be forced to cut in 2020, but we shall see. So anyways, hope this video helped. Otherwise, see you next week.